Hello. Happy Friday. Bounce back Friday after 4 days of selling super strong non-farm payrolls. I know some of the past were revised a lot lower, but this was a very strong number. There is no cuts in sight based off these numbers. I mean, even if it starts unraveling next month, you're going to need a few months of a lot weaker non-farm payrolls before you start even considering cuts based off this data. So, hey ho, Waka, thanks for being back. Hey, Christo, what's up? Thanks for watching, even if you're not live. Good morning, Jacob. I agree. I looked again to the Apple stuff even more. I wouldn't be paying up here for Apple. Would not be doing it. It's priced in as a very strong growth stock, and these aren't strong growth numbers. Good morning, Patrick. Hey, Christoph. Let's see. No, people don't pay attention to a lot of stuff anymore. People don't pay attention to they just look at the bottom stuff. Oh, it's a beat buy. Unless there's really bad guidance, then all right, what do we do? I don't understand your question, YouTuber. Do third week options call and put walls actually work or work consistently? What do you mean work? It's just stuff to pay attention to, especially because I like to pay attention to where gamma kicks in because it can fuel up and down moves. Good morning, Royal Palms. Good morning, PMG. Hey, Paul. Good morning, Anissa. Look like Apple declining year over year. Beat has just saved the market, and the strong job number are great for rates. Turn off your brains and go along. I'm not going. I mean, besides stuff today, which I'm not as even talked about yesterday, we could see a snapback day after 4 down days. I think we're going to be net lower over the next few weeks. This is just well, we've had no more crisis from regional banks since yesterday morning, and you had 4 days of selling. So if you're talking intraday, there can be some long opportunities. Are you talking just go long in this market and be hoping it goes higher for the next few weeks? No, not from my perspective. Good morning, Dave. What does your research show the time to exit when a double? I told you the thing that invalidates it is the close on the time frame you're trading it on beyond that 62.5. Good morning, Sterling. That's the last possible time frame. That's what invalidates the pattern. You can always get out beforehand. You just don't know if the pattern's invalidated. Again, there are many ways to trade these things. Good morning, everyone. All right, just making sure. I mean, longs today could work out just fine, but going into longer term, I just want people there's too many people are like, hey, let's just Apple was a beat, let's just buy the markets. It's a no-brainer. Strong unemployment, but these are the same people who say, where's my rate cut? We need to cut rates because of regional banks with strong unemployment. Okay, so everything, we're going to have a no landing, no recession, strong unemployment, but Fed should cut rates. Not lining up there. All right, speaking of the non-farm payrolls, again, some of the past months were revised lower. That was the only little bit of weakness out there, but forecast 190 to 180, 190, coming in at 253. Unemployment rate dropping. Prior was 3.5, coming in 3.4, and forecast 3.6. So again, downtick. Participation rate holding strong. This is where it gets interesting. Average hourly earnings month over month up 0.5%. Inflationary. And you see year over year still holding up. Even with any base effects still holding up. So, that is an inflationary component. Average weekly hours held steady. So you have earnings up with average hours holding steady. What else we have on tap today? You got rig counts, consumer credit, but nothing much. Nothing much. You got Apple after their beat with an I put that with an asterisk. Tesla, Nike, Amazon. You got oil bouncing back. Oil going to watch where it closes today because it broke above yesterday's high, which is a percent B buy if it follows through with a close. Energy, financials bouncing back. That's we got no regional concern so far today. But let's see, it's FDIC Friday. Let's see if after the market closes, we get any FDIC action today with a couple of the banks on the radar screen. Fed Watch tool, 2.8% chance for a hike in June. Let's take a look at these probabilities because even with the, let me refresh this once more because these have been changing a fair amount this morning. Even with this, still, pause June, pause July, cut September. Nuh-uh. Not with, even if unemployment goes back to like 3.7 by September. Nope, wrong go. Market's nuts. We're in neutral mode. So what does that mean? Okay, in terms of gamma, we're still in negative gamma, and that can also amplify up moves. The gamma flip keeps coming down, 41.34. We're trading 41.08. Just keep that in mind. The negative gamma starts as we go towards that 31.34, 31.35. It starts dissipating. And we start losing some of the put gamma from that 4100 area. So you could see some upwards pressure, especially again after 4 down days. Earnings this morning, there just was not much. Everything's still focused off Apple. All right. This is what I'm talking about. Down. This is the Dow. Let's get to the S&P. So 4 down days, a little snapback day. Still an inside day from yesterday. Confirming the double, but not triggering it. Not triggering it yet. So the Dow was triggered. But we have some pretty major resistance, 41.17, and then the 50% of this down move, if it plows higher into the open, look where we have gamma flip at 41.34, 50%, 41.34. So that would be a key target, especially if we start breaking above yesterday's high. That's a key target area I would utilize. And then above there is 41.50. The 62.5 is 41.52. And remember, anywhere back up in here, I would be watching for a rollover. To the downside, see, and here's yesterday's high area. You have a major resistance. You had the spike down from Tuesday, the trade through on Wednesday afternoon, the retest overnight, and this is key resistance. But above there, you're into a single candle clear path move with the breakdown zone being 41.34. But it has to really get above this 41.16, 41.17 area. Support. Let's see if we can find something good. I mean, still, this is a decent level. Same one from yesterday, 40.93. You see overnight pausing there, finally breaking above, quick little retest, and now plowing higher. So that's on a breakdown level. That is one of the key levels. Let me pull off this one. 40.93, and then below that it would be about 40.87, and then it would be right back to that 40.70 area. Good morning, Todd. Good morning, John. All right, NASDAQ. The NASDAQ. Again, yesterday's high, above yesterday's high. That's this key area, is 13,165. Look how it lines up with the prior harmonics, 13,227, 13,230 area. And then And then I'd be going to about 13,288, but that we'd see all the way up there. Key support 13,100 to 13,080 to 13,100. Below that 13,043. Back to the S&P real quick. This is also what I'm talking about. Daily cycles are not yet at the bottom. We're getting to a bottoming area, but weeklies. This has a multiple week potential downside run. We've dipped in the rotation zone. We have an outside week this week. We could easily come back and test some of these, even some of these key channel levels and the key double levels. So don't get sucked into a snapback move on a Friday thinking it's a long-term reversal. Dow, after triggering yesterday, this is where, after 4 days, daily cycles getting to the bottom. Nice little move to retest the breakdown area, 33,420. Above there, 33,575. That's still what is usual. You can go about 33,545 to 33,575. Key support coming in at 33,180 to 33,200. The Russell, let's just all rush into the Russell again. Lowest close yesterday, snapback, also percent B. Oh, and a break above yesterday's high. It would need a follow through in the close, but that would just be a return to the rotation zone, which has already been hit. So it was pretty much just a break of yesterday's high with then trailing intraday at this point. Key level 1761, same level as before. Support. Going to just bump this down a little to about 1730, and then we still have the 1717 area. The VIX, after triggering the double, coming back down, but we'll watch for some follow through next week. So the DAX still holding. 15.8 is still the key level. Not much else to talk about there. Notes, big reversal here. Big reversal, but still overall in consolidation. There's just not a good pattern there right now to bother with. The dollar, still consolidation, still trying to put in a bottoming pattern. Remember, the double was invalidated after never triggering, and now it's just a sideways consolidation. We're getting daily cycles back to the bottom and weekly cycles at the bottom. So I'm going to be watching next week for some more upward price action, but not really today. Crude, this is what I'm talking about, the break from the high with the follow through, and the target would be for the rotation zone, but it has to close above yesterday's high. So far we have the break and the snapback move there. Gold, pretty sharp reversal. So I'm saying I'm still watching for a top, for a corrective top, which would then probably bring it back to a more substantial buy. I am not looking to chase gold up here. Coming up, reversing off the harmonic, and then today with the strong non-farm payrolls, reversing rather strongly, but still the key level is this 1982. It has to really break below now 1982 before we get something going to the downside there, and that would be a corrective move, not a start of a new trend. Euro, Japanese yen. We're going to be watching for, see if we get some continued bounce going into next week, unless we do break below 133.30. Euro still barely holding on to the rotation zone, and we have a triple top. But I need something to really break below this 109.60 area. The pound does not have a mini potential double top anymore. So nothing to talk about there. Bitcoin, nothing to talk about. Tesla, still breakdown. Conservatives is 159. More aggressively is about 159.50 to watch for a breakdown. Breakout is still 166. Other than that, it's sitting in a sideways consolidation with daily cycles now starting to roll over again. So we'll be watching for that next week. What else do we have? I covered gold, Pep. Like apparently there's is not a problem with the banks. It's the evil short sellers. Yes. All right. You tell me how the short sellers are causing deposit pullouts, causing. I mean, I guess they're on social media saying the banks are going to collapse. This is all. It's blame it on the friggin' short sellers. That's why these markets are still a friggin' joke. Everything, even these CEOs, if they have bad stuff, well, it's the short sellers. The short sellers. You know, the long should be grateful for short sellers. A, they call out the stuff in the market. B, you know, when you get people love when the shorts get crushed. Oh, it's a short covering rally. People love that. You don't have it if you don't have the short sellers. I'm so tired of demonizing everything. You know what? If the banks weren't structurally inept with failed oversight and crappy leadership, you wouldn't have people shorting it. What a friggin' joke. These markets are just a friggin' joke. They've been that way. When you tune in to CNBC, what a night. That is like National Enquirer of the financial markets at this point. You want to talk about blended up pablum? Oh my gosh, I can't. It's a brain rot. There is no journalism there. There's there's nothing. Oh. So. Where do we see? I don't. What's FTNT? TNT. It's dynamite. TNT. A little AC/DC action on a Friday. I mean, what, they have a beat. I'd have to compare it to a longer, just pulled back to a key support level. But, you know, well, it would be an aggressive buy if it closes above yesterday's no, never mind. It's not valid. Sorry, there's not a setup there. From my perspective, I'd have to do more research into this from a fundamental perspective. Ooh, it's got a really high PE. The key, I'd just be watching below 58 is not good. You have a gap filled down here, but there's not a great buy setup, and any pop would be against a rotation zone at this point. So I'd wait for some kind of setup, and there isn't one yet. There's not from what I track, there's no decent buy setup, and any buy would be in a rotation zone, and I'd be watching for rotation lower. Oh yeah, we get into the spiders. Sorry about that. Spiders. We have the spiders. It's already filling this gap with a gap above there, and this is pretty key. So on a pullback, 408 is your key support. So 408 is key support. If you get below 408, then you're looking at 40. It just happens to be 407, and then it would be to the gap fill of 405.18. To the upside at this point, 410.25 is the key level I would be utilizing. Above there, if it had some massive rally, 412.35. On the Q side, let's see. Key support, we're going to open above this at about 317.70. 317.70, and then there's not much back to the 316.25 area resistance. It's trading above 318. So 318 would be about the first level of support. Targets the upside about 319.25 and then 320. That's based off this breakdown level. There we go. We got the Qs and the spiders. Agreed, Todd. Shorts actually provide market integrity and true price discovery, but you don't want to. People don't want to see that. People just want to reinforce their narrative now and then have something to blame. It's just but you know, it'll keep going until it doesn't. All right, that's where we sit today. Hopefully there'll be a live stream this afternoon. I'm recording the Jim Iorio Futures Edge podcast before then, so we shall see. Other than that, have a fantastic trading day, and I'll talk to everyone later. Bye for now.